Hello, welcome to the ESS BIZTOOLS Advisory Intro and Business Advisory Services Starter Package combined presentation. I'm Peter Towers, Managing Director of ESS BIZTOOLS. The Advisory Intro package has been designed to assist bookkeeping and accountancy firms who may not have undertaken any advisory work at this stage, or perhaps you think you haven't undertaken any advisory work. If you are wanting to offer services to SMEs, charities, not-for-profits, and sporting organisations, then I believe that the advisory services packages will assist you to service your clients and to improve your overall business performance. Why? To improve your clients' business operations, to assist those clients who wish to scale up, and there's still plenty of businesses wanting to scale up, to grow their businesses from their current turnover to 3, 4, 5 times that level over the next few years. These people need assistance. They need a real accounting input. And the Advisory Intro package helps you get underway on that. It will also generate interesting and challenging work for your team talent. Whenever I talk to accountants and bookkeepers all over Australia, I get told that retaining and attracting talented people is very challenging. I suspect one of the reasons for that is that the up-and-coming generations don't just want to sit there and do tax-type work all day, every day. They want some variety. Advisory services gives them variety. And they're all reading the news articles, the journals, the websites, which say that AI is going to have a tremendous impact on a whole range of issues, most particularly accounting. And a lot of that's going to be relative to the taxation return preparation, I understand from various reports. So it's very much in your interest, as well as your clients, to be really looking at what additional services you could offer to your clients. And I honestly believe the obvious one is advisory services. Performing a virtual chief financial officer service to assist your clients, just like a chief financial officer does in a larger business, because your team's only going to be involved, your whole involvement might only be for 2 or 3 hours a week, 52 weeks of the year. Your client can obtain your services at a reasonable cost for them, because you will be adding value to their business. So you will generate diversified fee income. So let's go through the packages. The Advisory Intro assists bookkeeping and bookkeeping sections within accountancy firms to deliver advisory services. It's also very applicable to smaller accountancy firms that hadn't ventured into advisory services previously, because some of you people contact me and say, well, where do we start? Well, I think you've got to put your toe in the water. You've got to get underway. And the package that we've put together in the Advisory Intro will get you underway. Now, if you don't think that's enough material, you can immediately upgrade to the starter package. And that's why we've got the starter package in this joint presentation today. And we'll be coming to that a little bit later. So within the advisory services, and everything that's in the advisory package also applies to the starter package. As it rolls on then into the advanced package and then into the financial forecasting package. It's 4 steps. We're at step 1 when we're looking at the Advisory Intro package. The first thing is the SME needs analysis. Now, that might sound some fancy words, but basically what it is, some points of discussion to have a discussion with your client. Why, you might say? Well, we want to know what's worrying your client about their business. What wakes them up at 3 a.m.? What's concerning them? Now, they really don't expect their bookkeeper or their accountants to open up and want to talk to them about a wide range of business issues if your involvement in the past has primarily been around taxation. So that's the reason we've developed these series of discussion points. How's business going? Are you happy with the gross profit percentage? We've done a look at some of your performance figures against benchmarking reports, and we've noticed that your team's productivity is 15% lower than what the benchmarks are saying the average is for your industry. They're the type of discussions that you can get clients' ears opening up and saying, oh, tell me more. Then you can say, well, you could analyze this. You could help them understand this. You could talk to them and then to their team members, if they like, about how the improvements could be made. Library of articles. You will have 340 papers that you can badge with your firm name and send to your clients and prospects, because some written articles adds to the discussion you've had with your client. It reinforces in their minds why this was so important. The Business Plus newsletter is a key document which ESS BIZTOOLS produces each month. We upload it to our website on the second Friday of each month. We send each of our subscribers an email confirming that we have uploaded the next edition of Business Plus. And we also send a video that explains the articles that have been produced. There's normally 4 to 6 articles in a 4-page document. The articles are written targeted at your clients, not you, targeted at your clients. And we have imaginary clients in mind, those who are thinking about starting a business, those who have been in their own business for 1 to 2 years. They're still in a bit of quicksand. You might say a lot of quicksand. And then there's others who have got through that baptism of fire and they're now settling down, hopefully. They've been in business for 2 to 5 years. Other people are looking at succession planning. Other people are growing and they're undertaking innovative activities. They're looking to undertake research and development. They're wanting to know what the taxation benefits are. They're also saying, well, where are we going to get the money from to finance all this? So they may well be interested in looking at the capital raising opportunities. So all of these concepts we discuss in these editions of the newsletter. Our suggestion is to you is you follow up your clients, you talk to them. We have a client profile form which will assist you to have a conversation with your client. If you see that a client's a tradie and he tells you he's doing some innovative activities, the system is going to suggest that you talk to him about research and development, and you can give him an introductory paper on the research and development system. So the client can then indicate whether they wish you to advise them on that area. The SME mentoring and coaching resources is some material that is customized for particular business types that you can use to have further discussions with your clients. And all this is getting information through to your client that you do know a lot more about business than just the tax return. And there's some seminars that you can present as webinars if you wish, pre-prepared, ready for you to utilize. But it all starts with what we call the due diligence review, because you need to know a lot more about your client than what you currently do. You need to know 1 inch wide and a mile deep, rather than a mile wide and only an inch deep in knowledge about your client. You need to clearly understand their internal control systems, how the whole business works, because you're going to be performing the virtual CFO role. You need to understand these things. And there's proposals and quotation forms, and there's an introduction to business planning, because business planning is vital to every business. Then we got budgets for all operations. And part of that process is the key drivers. This is the debtors ledger. What's it going to look like in the future? And very importantly, how much money is going to be owed at the end of each month by debtors? And that gets back to the debtors days outstanding. And is it realistic what's been put into the budgets? Creditors. Are there special creditors? Creditors that have got to get paid every 21 days, otherwise you don't get deliveries. And that would grind your client's business to a halt. What's the investment in inventory going to be? Is there a need for pre-Christmas build-up in inventory? When does that build-up start? Is goods coming from overseas? When are the payments got to be made? What's the cash input going to be required to get that inventory in place so that your client's got it for the Christmas and New Year sales? So budgets and cash flow forecasts require a lot more thinking than what was previously done in budgets, where people took last year's figure and added a percentage. That's rubbish, quite frankly. And I hope you're not doing that. And if you are, please throw it out and look at the system we've got. And we use Plan Guru software, which will guide you through this process. So you've got cash flow forecasts and projected balance sheets. The key business system that we're advocating is the 52-week business enhancement system. And the key words are 52 weeks and business enhancement, because this is how you get the businesses to run properly. Every business needs some daily information, and weekly reports are vital. The big end of town has been producing weekly reports on every one of their business operations for years. I was the chief financial officer in a listed public company some years ago, and we had 400 operations in 3 states. Every one of them had a weekly profitability estimate prepared. It was available by Tuesday afternoon. I sat down in head office on a Wednesday with my team. We analysed them. I sat down and had a sandwich at lunchtime with the CEO and went through the results. What he was interested in, the ones that had not achieved profit. And he was spent Wednesday afternoon on the phone talking to area managers. We had 13 of them around Australia, and they had an accountant working for them and other team members, and they would then analyse what went wrong and try to fix it. And they had to fix it. Compare that to what happens with most of your SMEs. Are they getting this sort of feedback? But are they running butcher shops and small goods factories and delicatessens? Because that's what the big end of town run. That's what our company was running. So our manager in a store with a huge supermarket alongside him got that information. But how many of your clients sitting 40, 50 metres outside Woolworths or Coles or IGA in a major supermarket had had the feedback to tell them exactly what they achieved the previous week? Gross profit percentage, average sale, net profit. Now, admittedly, it's got a degree of guesstimating in it, but in our company, we were expected to be 98% accurate. And at the end of the month, the CEO used to say to me, "Did the monthly accounts prove that the weeklies were right, Peter?" And most months I could say yes. And he said, "Okay." I don't think he really read the profit and loss account in a financial format basis. He knew the weeklies were right. That's what he was running the business on. Woolworths, Coles stores do this. I talked to some of their store managers, 42 departments, 42 P&L accounts with their key performance indicators. This is the system you need to implement if we are going to help SMEs to survive in Australia. The failure rate's too high. It's up 34% on the failure rate already this financial year. That's disastrous. I think it's an insult to accountants and bookkeepers, to be honest. And someday, the way the governments are all going on in Australia of blaming someone for everything, sooner or later, our profession is going to get blamed for these abysmal results that SMEs incur. Now, I know every SME doesn't turn up to see you at the beginning of the year, but they should. And we should be proclaiming as a profession that we can help those people to plan their businesses. No one should start in business without having a proper business plan prepared, budgets and cash flows that have really thought through the peculiarities that are going to apply to that business. Not just everyone else, that business. What industry are they going into? What have the suppliers told them? They should have already made contact. Now, some suppliers will put them on cash on delivery for the first 6 months. But have they built that into the cash flow forecast? invariably I find out people haven't done it. Or you, or as an accountant or bookkeeper, might have prepared those forecasts, hasn't done it. Maybe because you never asked the question, but we've got to ask these questions. We're going to dig down. We're going to get the client to go and explore these things. Otherwise, they become one of the statistics of failure. So we need balance sheet analysis. We need working capital analysis. Our systems are going to give you the tools to work with your client to get all this. You also have a very important role to be alerting the CEO to funding requirements and being available to receive some requests for additional information. I reckon I spend 2 to 3 hours a day, some day 10 hours a day, with the CEO responding to requests. Pete, can we do it this way? Can we change this? The market for meat in Russia's gone up 20 cents a kilo overnight. Can we switch some of our meat that was going to go to America to go to Russia? And what's the impact? All these costing exercises. How often do you prepare costing exercises for your clients and analyze them? That's what goes on in business, larger businesses every day. We need to implement that in SMEs if SMEs are going to survive. What about government grants? There's hundreds of government grants. We write material on government grants and give you an update every week if you're a subscriber to ESS BIZTOOls. So you can be alert to it and say, gee, there's grants for this type of business and I got 6 of them. I need to contact them and tell them that we can get a grant. And one of the big new grants is the Business Improvement Initiatives, which has got grants of up to $5 million. Now, I don't expect too many of you are going to get too many $5 million grants. Clients got to match it, of course, so they're going to have $5 million. But it brings out the possibilities, doesn't it? And most of you will have tradie clients. Do you ever sit down with them and examine how they set their charge out rate? So their charge out rate's going to earn their targeted profit. Do they have a targeted profit? Have they got any sort of targets? One of our subscribers has got 120 tradie businesses on their books. When they come to us, they had 10, they told me. And they've never advertised, I'm also told. They just let word of mouth. The tradies talk amongst themselves. And do you know the fees being charged are $8,000 per business for the tradie charge out rate, monthly financial accounts, a brief meeting, on top of what the previous fee was for preparing the annual accounts and the tax return. 120 clients, not a bad little sort of income stream, is it? Tradies. We've got the rate calculator. We've got it all prepared for you. And you get it in the first package. Government grants, research and development. We give you some material so you can respond to the clients. You can have a conversation and say, geez, you told me you're doing some innovative activities. Do you know about the research and development tax incentive? I can give you some preliminary material. Now that will at least show them they've got to be a company. They've got to spend more than $20,000 in the financial year on R&D. It could be over any number of projects. It hasn't got to just be one. So you are seen as that key advisor for your clients. Now, it's going to be up to you if the client then turns around and says, well, can you help me on the R&D journey? And it is a journey. We've got all the material in it within our 4 packages. In fact, it's all played out in 3 packages, the first 3. And you can make a decision then. If you're going to get work for R&D, we've got that complete package that you can then subscribe for. But we want to equip you with the ability to be able to communicate to your client about all of these issues so you can answer them. And if you decide you don't want to be involved in some of them, you want to pass them on to someone else, to the accountant or to a larger firm of accountants, that's all right. You can pass them back to me and I will make inquiries to see if I can get other firms to do specialist work, or my own consultancy business might do that specialist work. So let's move into the starter package now. We've done the advisory intro package. Obviously, it's for the same group of people. And don't forget the charities, not-for-profits and sporting organisations. Some of them are quite large businesses these days, and they're looking for support. The client profile form You get client mentoring and the client seminars that I talked to you before. You get a few more in the starter package than what you get in the advisory intro package. So you've got resources that you can use initially in staff training. That's what some of our subscribers do. They use the seminars to put their team members through familiarization processes. These are the issues that confront small businesses. Let's do some role play. How are you going to handle this? How are you going to talk to the client? The key document is the financial accounts. I think they have to be prepared each month, not quarterly, monthly, because we want the key performance indicators and business metrics to flow, because they're the key numbers that the line managers in an organization are looking for. They don't see the bottom line profitability. That will be going to the manager as such. But the foreman and other people who are involved in some sort of supervisory role, and indeed some businesses share all sorts of figures with their team members, they need to be produced and be able to be supplied to them. You also need the comparison of the monthly accounts with budgets. It's no use preparing budgets and then throwing them in the bottom drawer, or just leaving them on the computer. They've got to be real workable documents that you're referring back to at least once a month where you're doing the budget comparison. Because you and the leadership team sat down at some stage at the beginning of the financial year and constructed budgets, cash flow forecasts, and projected balance sheets, together with the key drivers, those key accounts I mentioned before. What's caused the variation? What's gone wrong? That is important management information. But unfortunately, most managers will not unearth that. They'll know there's a problem, but they will not unearth that unless they have a strong bookkeeping, accounting involvement in getting them the answers. Putting it on a sheet of paper. This is what caused this problem. This is how commercial businesses operate. We as a profession need to be doing that for them. The balance sheet also needs analysing because there's some key information, isn't there, about the working capital analysis. Debtors, stock, creditors, work in progress, the bank figure. And then there's a financial report prepared at the end of the month to go to the owner, or if the owner's got a board of directors, to the board of directors, and perhaps the owner's got a board of advice. And we've got material on both board of directors and board of advice that, again, you can act as a trusted advisor to talk to your client about the benefits of having some input from other experienced people. Because running a business is very lonely. And there's a lot of companies out there that have only got one director. It's a lonely operation. They can really get some benefit from having a board of advice. We have more of that in our systems. The charge out rates. For professional service firms, your own firm, why not make a subscription and use that package as your first package to check what you're charging out based on the productivity of individual people, the overhead expenses, the desired profit margin that you'd like to make in your firms. Make your firm your first test case. And we've also got the tradie charge out rate calculator, which was also in the initial package. But then retailers and wholesalers, you've ever worked with your clients who are in retail? When I was in the meat industry, that was the public company I was in, we had butcher shops and small goods factories and a few other things. And you really learn about the components of stock. There's 4 key components, and knowing what is likely to happen is important. You got the stars. They're the things that have got high volumes and high markups. Everyone dreams of only selling stars, but it doesn't happen in too many businesses. Then you got the cash cows. They're the things you sell a lot of, but you don't get much markup on. But you need them. You should make sure your client hasn't got them all at the front door. You need to spread them through the store and put them alongside the stars so that when they turn up, Oh, there's the cash cow item they wanted, which might have been milk or the newspapers or whatever. And alongside it, some beautiful ham off the bone. It's just been sliced. It's sitting there very attractive. That's the star product. They buy their paper and they decide they'll take some ham home for breakfast on a Sunday morning out of a corner store. That's how corner stores make money. So think about it. And we've also got a manufacturer's charge out rate calculator with key performance indicators for you to use. Government grants, I talked about the research and development one. And now we go a bit further in this package. We go through to going to the company's board of directors for approval. So this is the whole getting approval to proceed, because the tax office asks who approved this R&D project. You've got to remember that a lot of the research and development activities are based on the tax office's perception of what happens in a big business. And nothing happens in a big business unless it gets approved by a senior executive or a board of directors. And therefore, the rules have been written around that happening everywhere. And the research projects are copied on the tax office's understanding of what happens in universities. This is how a research project's undertaken. So if your clients are going to want to undertake research and development, and a lot of SMEs do, but a lot of them are scared off from their bookkeepers and accountants and go up and talk to either outside consultants or top 4 accounting firms, which is not really the right mix. Okay, so then we can move on to capital raising. Your client's underway, they're doing things, they spend a lot of money on research and development, and the client rings you up one day and says, geez, I need some money. Well, the first opportunity is you look at borrowing. So I think one of the key questions in most cases should be, well, have you got any assets to offer as security? And they might say, no, my mother-in-law is not very happy about offering another home unit as security because I've already done that for the bank overdraft. So no, we've got no more assets to offer. Then you can turn to what share capital is able to be raised. Now, a few years ago, small companies could only raise capital under Section 708 of the Corporations Act. We've had it now for over 40 years. It's been a great servant. But 6 years ago, when Malcolm Turnbull was Prime Minister, he made sure that 2 new capital raising options were introduced for SMEs. Early stage innovation company is really targeted at young companies. The main target is under 3 years of age. There are some ways companies up to 6 years of age can be admitted. But their turnover is very low, under $200,000 in the previous 12 months, unless they've received a grant from the Accelerating Commercialisation Grant. That doesn't count as income for this purpose. And their expenditure has to be under $1 million in the last 12 months. So they're small. When you go through and look at the tests that they've got to pass, they are involved in innovative activities. They really need to have been involved in research and development. They may have been admitted to the Accelerating Commercialisation Grant. And I'm hoping the government's going to change that legislation to substitute the new replacement grant for accelerating commercialisation, the business improvement grant, so it's still consistent. The real advantage for an SME who meets the guidelines of an early stage innovation company is that the government deliberately included a carrot to attract investors. Malcolm Turnbull really understood how SMEs go about trying to raise money. He'd been very successful in some of his investments, made a lot of money apparently. So he understood it. And he built a carrot in there. And the carrot is that the investor in this process to be an early stage innovation company gets a 20% of their investment tax rebate. So that there are some cut-off points. The maximum rebate for a sophisticated investor is $200,000. And for a retail investor is $10,000. So they get that off their tax bill, and it can be carried forward until they use it up. But More, there is more. If they hold those shares for longer than 12 months and less than 10 years, and then the companies, they sell their shares, there is no capital gains tax, none whatsoever, irrespective of what value those shares might be sold at as compared to their original investment cost. That's great, isn't it? No capital gains tax. And at the end of 10 years, if that investor still holds those original shares, the cost price can be revalued based on the company's current value. And now let's turn to the other one, which was the running mate of early stage innovation company, and that was called crowdsource funding equity raising. Now, this is available for a company with a turnover up to $25 million and the value of gross assets up to $25 million. So it's opening up a lot of opportunities in any type of industry, located anywhere in Australia. No restrictions on number of employees. You must have 2 directors, one of which must be in Australia. And they can operate anywhere. Over $380 million has been raised by those companies since this got started. It got up to a very slow start, but it's starting to pick up now. Australia was 6 years behind the rest of the major industrial nations, including New Zealand. They'd all got started. We seemed to dilly-dally around, and then we got started. Crowdsource funding equity raising. And your clients could raise $5 million in 12 months. And they could then go back and try to raise another $5 million the following year. Now, there are procedures, and this is all set out in our step-by-step guides for all of these, so that you have to be the mentor and the guide to take them through. We give you the resources, and we run training sessions on these product packages. It's a great way to help your clients. But in the first instance, you need to have the resources, the knowledge. So if a client starts talking to you about any of this, or how they're going to raise capital for their business, you can start giving them some of the papers that you will have. Out of the 340 papers that you'll have access to, you've got papers on each of these items. So you can give them to the clients, get them interested. Because this is all about you promoting advisory services to help your clients run better businesses and supply your team with interesting and challenging work and earn some additional fees for your firm. Does that all make sense? If it doesn't, please let me know, because I must be barking up the wrong tree. I think it's an exciting opportunity for accountants and bookkeepers. In our material also, we got buying a business. There's a lot of businesses getting bought, isn't there? Someone told me yesterday there's going to be a buyer's market in the next few years as more and more of the current generation of business owners look to sell. A lot of them put off their selling decisions because of COVID. There's an expectation that these people are going to be selling businesses. What's that do? Are your clients ready? They got all their material worked out to look at buying a business. And there's also detailed packages on selling a business. There are traps in both of them. Debtors management is an horrendous problem. You know that a few years ago, Australia got awarded the dubious title, the highest debtors days outstanding in the world. I'll repeat it, the highest debtors days outstanding in the world. I can assure you I had no pride in that statement. And I don't think any accountant or bookkeeper should also. What are we doing wrong that our clients are getting caught up so high with debtors? I think a lot of it is they don't understand the system. So we need to explain that to our clients. And we've got a complete package on it. You've got a manual you can brand with the client's name. You can go through and do some edits. If they call the cash receipt book the red book and they call the sales journal the green book or whatever, you can put them into the system instead of the words we've got. The important thing is you're showing an interest in your clients. So have a look at their system. Do they have an agreement with their new credit customers? And do they spell out very clearly what their terms of trade are? When will invoices will be paid? Do they tell their clients, their customers, whether they're going to be issuing debtor statements or are they expecting everyone to pay on invoices all the time with no statements? And when they produce an invoice, do they stamp on it the due date for payment on that invoice? Do they also have an internal system to make sure if the client has requested some additional information, it could be a weighbridge certificate, it could be some sort of health certificate or whatever, accompanies the invoice, that it does? Because if these things don't happen, payments don't get made on time. And especially if your client's dealing with the mining industry and other big employers, if you don't get in the monthly billing process, you wait at least another month to get paid. And then what happens to the debtor statements? I've seen some woeful examples of slackness in debtor statement issuing. I think they should be emailed 24 hours after the end of the month. Now that means the bookkeeping system has to be up to date, doesn't it? So that the debtor statements can immediately go out. And then there should also be follow-up action on those individual invoices, especially if there's a fair bit of money involved. Someone needs to be ringing 2 days after that due date payment that was stamped on the invoice hasn't been paid. Follow them up. The squeaky door gets the oil is an old saying, and it's very much applicable in debtors management. You can supply your clients the resources on this. I mentioned before corporate governance issues, directors and board of advice members. Is very important that you utilise the resources we've developed so you can have that communication with your client. And don't forget, we're saying that this package will also be suitable to SMEs, not-for-profit sporting organisations. The committee members of those organisations also have responsibilities and duties under various state legislation. We've summarised that in our material. We have a package on survival in difficult times. It's a series of questionnaires for you to talk to your client about, so that where they identify they're having problems, it links to an article that you can then supply to them. So hopefully they can understand how they can get out of that situation. And there's always difficult times somewhere in Australia. A lot of them are caused by climatic conditions, but others. We've got KPIs and business metrics for those industries there, and we're adding to those. So these are working papers whereby you record transactions week by week, so you can immediately see any fluctuations and say, what caused that? What caused the average sale to drop from $22 to $14? What caused the gross profit percentage to drop from 38%, which is the expected, and that's what we've been getting, to 22%? What happened? Something's gone wrong. There needs to be an investigation. And unless these systems are introduced, a lot of these things get lost because no one's looking at the results on a weekly basis and reporting back to management. But they do in the big end of town. And that's the system I think we should be implementing for our clients if we're going to help our clients to survive. So that's my summary of these two important packages. The reason we've put them together is some of you will be saying, well, okay, we want to get a bit more action, so we're going to go straight into the starter package. That's okay. You can do so. But to get started on the, we've got the starter package first, because it was the last one we've looked at. It'll cost you $1,980 to have everything I've talked about today and a lot more, including GST. So you pay us $1,980. We will have a password to you within 24 hours, and you will be underway. We'll be sending you the training program. Or you can pay us in 12 monthly payments of $198 if you wish. Costs you a little bit more, but you can do it. Now, if you're saying, oh, well, we're not sure about any of this, Peter, we want to tread carefully. Well, don't take too long treading carefully. The market is changing. The tax commissioner's warned you of this. And an expert I was talking to yesterday really frightened me when he talked about the consequences of AI. Now, we use AI in ESS BIZTOOLS for some of our material, but this gentleman told me there's and he runs a business supply business with high-tech technology. There's an avalanche coming. And accountants are one of the key industries being named in expert reports in England as being one of the key groups that's going to get hit. So we need to be expanding our services. Don't wait to be hit. Might be too late then. So the advisory intro product package, which at least gets your foot in the door and gives you some resource material that you can be portraying yourself as a trusted advisor to your client in advisory areas. You can get started for only $990 for the year, $990, including GST, for 12 months. That price is only available for a few more days. Or you can pay us in 12 monthly payments of $99. I don't think you'll get a cheaper offer to get started in the exciting area of being able to offer advisory service. And then part of the package is you get group training. For each of those 4 product packages, we have 10 training programs, 1 hour each throughout the year. And we've decided this year, because people who are only subscribing to the advisory intro package ring me at times and say, oh, there's something on in the advanced training, can we go to that? We've decided once you're subscribed to ESS BizTools, you can go to any training package. That might show you about some of the other products that are available. You might say, well, I need those, so you can upgrade. But if you want to have one-on-one training, and some people do, or one-on-your-team training through a Zoom webinar presentation, we will do that for you and we'll give you a pricing costing on what you want, but it'll be around $300 plus GST, $300 plus GST an hour, and we will present that material to you. So if you're interested in subscribing, and I hope you are, because I want you to join me on this journey to really supply value-adding advisory services, to implement this, not just talk about it, not just put it on your website, but to proactively try to encourage people to get involved. Let's go to our website, please, www.ESSBizTools. Click on packages and pricing. That's on the page that will come up. It's very clear, packages and pricing, and then click on the product package that you're selected, whether it's the starter package or the advisory intro package. Now, if I haven't given you enough information, you can look at our website, or you can send me an email, peter@essbiztools.com.au, and we will then get together. I think all of this will help you add outstanding services to your clients. Advisory services is the way to go. Don't wait until the train's just about knocked you over. And the train is coming. The tax commissioner, an ex-partner in KPMG, so he knows all about the accounting industry, warned our industry, bookkeepers and accountants, 18 months ago now, that within 3 years, so it's only 18 months to go, something's going to hit, because the technology is taking over more and more of the work related to tax returns. If you don't believe him, well, sit on the side of the railway track and wait. But I don't think you'll be very happy when that problem occurs. I'd like to help you now. Please join us so we can work together to help your firm deliver an outstanding range of advisory services to your clients. Thank you for listening. Stay safe. Have a great day. Goodbye. And I look forward to hearing from you. Please give me a ring if you need further information. 0747 24 118. Goodbye.